deal, especially in the stock market, unless this time is different than it's been in the last 150 years. Markets go up.
Mm-hmm.
However, we want to use this as, I love using weakness as opportunities to buy more high quality stuff, but I also don't know if we want to get too quick to buy high quality stuff.
Yes.
So I'm in a scenario where I'm excited about this drop because there's some stuff that's becoming on sale and that I'm excited about. But it's kind of the balancing act of, do I start getting in more aggressively now, or do I wait for lower prices? It's kind of a conversation we're going to have today. But yeah, things are getting on sale. We got to figure out, are they going to go on sale even further?
Mm-hmm.
I think so.
Yep. And so, and on that note, I mean, this is something you can go back to these sessions. You can go back to the weekly investment draft, go back to our AAA sessions. You can check out, your Facebook page, your webinars, Tyson, my trading room. All of this has been talked about and planned and premeditated. So the fact that we're actually getting enough to turn the market cycle into like, oh, everything's selling off. Oh my gosh, this is scary. What is this, a bear market? It's amazing how much a little bit of pain in the markets makes everybody panic. And look, this is what I would expect. Now, we talked about this, Tyson. There's a couple ways that we could see this playing out. I will zoom in on my chart. And number one, what you see on the charts, everybody, this is my right trader system. And this is actually technically the reason why I was anticipating a sell-off. And I expect the S&P or the SPY to drop from recent highs whenever we start to break the structure. Expect it to drop down into this red dynamic support and this gray shaded zone. So price level, I'm looking for the SPY to drop back into somewhere around 410 or lower. All right, now how do we get there? That's always the question, because we had an aggressive gap lower today. Essentially everything in the U.S. markets, U.S. indices, anywhere between 1.6 and 1.8% gap lowers, and we failed to fill that gap. So Tyson, unless we're staring at like the most amazing afternoon rally, and that's still, I suppose, is still a possibility. We fought back all last week. But if we see a fight back that looks something like this, where the market pushes up and we have this big, long wick to the south, that would be the market's ability to fight back, but not necessarily do any damage to this bearish trajectory for right now. So as far as corrections and selling off, how far does this go? How painful does this become? Let's just talk about the levels. Okay, another stock you see here, Tyson Microsoft. This has been one of the most overblown technical charts that I've seen in a long time. Again, I'm looking for some nice levels to start buying quality stocks at good prices, but I'm not ready to jump in right away. So it's not quite buying spree for me yet, but I would say to traders this week, pay close attention. So right now, we're looking at from high to low. For my Pulver report, we were talking about a 2.96% correction from the recent highs to last week's close at the lows. And here we did gap 1+% lower. We're currently sitting with about a 5% correction from the recent highs. Now, this might continue to get a little bit more painful. There's 7%, and there, Tyson, is 9.7%. So like I said, 7 to 10%, fully expect that to be a healthy correction cycle for the SPY. Now, if traders are wondering why, what are the reasons we talked about today, Tyson? China, debt ceiling, rate decisions this week. The Fed has a rate decision, Bank of England, Swiss National Bank. We've had catalysts out there running for the last, couple of months of geopolitical landscape stuff. So, again, I don't want to downplay the fundamentals, but it just is the excuse that the markets are using. So what else do you have out there that we're missing that maybe be the reasons or the reasons why, are the catalysts that are really driving the markets this week?
Yeah, I think it's it's due. I think everything you said with geopolitically China, everything that's going on right now, and technically, I think the technicals. You got to remember it's sometimes the markets aren't as complicated as sometimes we make them. We run out of buyers.
Right.
Now we're never going to run out of buyers. So that's another thing that people really need to stop and think about. We have a natural multi-trillion-dollar buyer, multi-hundreds of billions of dollars of buyers coming in the markets every single year. Those two biggest culprits are corporations doing stock buybacks and employees in their 401k and pension plans having these automatic buy programs that they will have forever. And so that's the reasons why this whole adage of the market goes up. Well, it does. Why? Because we're always going to have natural buyers, but it doesn't necessarily mean that the buyers. You also have trillions of dollars that have already bought that'll eventually get to a point where they say, wow, I've got a lot of profits in place. And we have increased capital gains and corporate rate taxes that are going to actually take place now, Chris. And this is something that we've warned about for a couple of years.
Yep.
Now it's actually going to take place. People are going to want to start locking in some profits, because if they see higher taxes next year, the year after, then they can lock in today. I'll give you an example. If let's say tax rates go up 10%, I'm not saying they're going to, but if they did, and I've got $1 million worth of profits, if I sell today, I can save myself $100,000. Now the risk is I miss a big leg higher.
Right.
The reward is, well, I just saved myself a bunch of money. And there's multi-millionaires, even billionaires out there that have millions and millions and hundreds of millions of dollars worth of profits in stocks right now, and they're looking at something we gotta think about. So I think it's just, listen, we're due. Fundamentally speaking, we're due. With that being said, I still think we've got to use this weakness as opportunities to buy, because until there's an alternative, Chris, where else are we going to put money?
Right.
So the conversation I want to have is, okay, if the S&P pushes down to 400, which I think there's a gap sitting there, so I think 400 is a very, very key level. So we push down another 7 to 10%. What is on our watch list? I'm going to give you guys my favorite three speculation stocks, and I'm going to give you what I think is a safer play for when the market moves down. So what I would do, Chris, is this. Let's say I'm in cash.
Mm-hmm.
I have a big cash position, which I have a pretty sizable cash position right now.
Same.
But if price flushes down to 400, a low tide's going to sink all ships. My speculation stocks, my top speculation stocks that I want to buy, and I don't know, they might be out, by the time the market gets down there, these stocks could be cut in half because they're way more volatile.
Right.
These stocks could be higher because they've already been, beat up a lot. I don't know where they're going to be, but I do know this. When the market hits a low, these are the three that I want to buy.
Okay.
My three favorite that I think are very speculative, but also safer speculation, which is Skills, SKLZ, real company generating real revenue in a real growth environment. It's think of mobile gaming. They also have I was thinking it was going to be this year. I was wrong. They have a partnership with the NFL. They're launching their NFL game in 2022, which is, I think this is a hold through the 2023 first quarter, and I think you're jumping for joy because the thing is just going to crush it by that point. Anyway, Skills, Body, BODY, a lot of stuff happening. Been beat up. It's got a little bit of a bid into last week, which was good. Still on my favorite speculation list. Real company generating $1 billion worth of revenue. Real company, and then Fisker, FSR. Fisker is probably the biggest speculation on this list because technically speaking, it generates zero revenue right now.
Right.
However, the reason I like it is because some of the partnerships it has, and I think it's going to be able to overcome some of these supply issues with some of its partnerships. So those are my three favorite speculation stocks. And then there's also a little bit of a play off of Fisker in one of my safer stocks. And this is a future play also I would say it's safe to say that the electronic vehicle movement is real and not going to go away. Whether you like it, don't like it, whatever it might be, it's here and it's not going to go away. One of the leaders in that it's kind of a covert play. It's called Magna International. It's one of the largest automotive essentially automotive platform builders in the world. MGA is the ticker symbol.
MGA, okay.
They develop the cars. They don't stamp their name on it, but some of the Volkswagens you're driving, some of the Jaguars you're driving, some of the Audis and stuff like that, they have a partnership with Fisker. Magna is actually the one that manufactures those, and then they these companies slap their name on them.
Mm-hmm.
So Magna is their manufacturing plant for the automotive industry, and they're specializing in electronic vehicles. The balance sheet right now, Chris, is phenomenal. It holds very little debt. It's trading at a price to sales of 0.59. It generates almost $40 billion of revenue, and it's only trading at a $23 billion valuation. It has a 2.2% dividend yield, and it's not a new stock. This is
a lot of history on this one.
A lot of history.
Yep.
I love this stock fundamentally. I think it is a safer place to start hiding out, and actually a safer place to start establishing this is one of those, I think this is a 10 to 15 year play, could be almost a sock away stock that has massive growth potential in it. And it's kind of a covert under the radar EV type of play. So MGA is one of my safer plays, and then I have those 3 speculation plays.
Very nice.
That's where I'm going to start to look to buy when the S&P 500 goes down to that 400 level. Those are going to be my top 4 targeted stocks.
Very nice. I know that we also have some fintech plays with Rocket and SoFi. We talk about those quite a bit.
Like those two, I would put those in the same category for sure.
Safer, yeah.
Yep.
RKT and SoFi. And then I still have my infrastructure plays. But what's going to be I'm not necessarily worried about this, but there could be some troubled waters ahead on just not getting this passed. We have a debt ceiling debate. So essentially, we need to have Republicans and Democrats get along this week to suspend the debt ceiling. It's been an ongoing issue for the last 12 years. I mean, I've been trading Forex for the last 13 years. I know that this is something like, the dollar, the debt ceiling. It was raised, I think during the Trump administration, it was raised 3 times. So it's either suspended, like as in we allow the spending to go through, or we raise the debt ceiling. And this is always something that, unfortunately, we've become so polarized with these two parties that it becomes a political play. It's weaponized. It's, we're not going to sign it. We're not going to do it. That's the threat. And then the 11th hour, it's like, look, you can either shut down the government and create just all this uncertainty and chaos from internally, or you can figure out what the hell you're supposed to do when you're representing the people, right? So anyway, I still am thinking something's going to get done this week. It might be ugly. It might be noisy, but between the Fed rate decision, the 11th hour, some type of, either suspend the debt ceiling or raise the debt ceiling, we'll find out. But it's going to get ugly. It always is. It has been for the last, forever. I mean, easily the last 5 years has been probably the ugliest politics we've seen in a long time. But I still like some of these infrastructure plays. Alcoa has been treating me really well. CLF-X has treated me really well. And I also got into one, GGB, and I'm gonna keep it at that. GGB is a Brazilian steel company. The other ones are all U.S. based. But let's take this out. I'll stick with these 3 for right now. These have been ones that you've seen me talk about a lot in Equities on Demand. And Alcoa has been honestly one of the most bullish, volatile stocks that I've traded in a long, long time. I've been focused on nothing but credit spreads and buying dips. And I just actually, in literally 3 days, I told you this this morning, in 3 days, I lowered my entire cost by 42 cents in Alcoa with a 3-day covered call. Like, that's how much premium this company was paying out with the recent rallies we've seen. So I was able to lower my cost last week within 3 days to the Friday expiration. I went out and did a covered call at the new highs. And still, if I get it called away, I'm basically making money at new highs in Alcoa. CLF and X gapped aggressively lower to start trading today, and I got right in on some credit spreads with a couple of small levels. We know that CLF and X may dip a little bit more, and I'm ready for that. But I've been trading these enough for the last 6 to 8 months that my cost is actually down pretty low. So I'm sitting on profit. It's just a matter of weathering the storm here, get these kind of value plays to work themselves out, find a stable base, and then work it back up towards higher highs and hopefully increase my overall profits in the next maybe 3 months or so on these and have some big profits ahead. So these are some really great stock positions if anybody's interested. Like Tyson said, speculation plays, high growth potential. We have a ton of these that are in our Equities on Demand portfolio right now. We also are talking quite a bit about, we're trying to balance this entire market because we are in bear call spreads right now on the SPY, Tyson. We're in bear call spreads on the Qs. Those are working out really nicely. And I did make the note this morning, if anybody is in those bear call spreads with us, we're essentially looking at anything like 90+% of that profit target. We're going to go ahead and start protecting it because at that time, we'll start getting towards, profit, or we'll start getting towards levels that we want to buy, right? We want to buy things we like on sale. And so that would also bring us back into stocks like Apple and Microsoft and all these crazy tech stocks that have essentially taken over the world. And, the Qs are making the S&P 500 move very much in a similar fashion. So here is Apple. Same thing. Look at this bar count, Tyson. Apple bar count. Last time we touched the shaded zone, we're talking about 367 bars on a daily chart. Apple could certainly drop back down into 135, anything lower like 120. You know as well as I do that there are... this is no joke, Tyson. Did you know that Warren Buffett, like Berkshire Hathaway Holdings, it's like 20% of their portfolio is like Apple stock?
Yeah.
Isn't that ridiculous? It's like Ray Dalio and Bridgewater, like 15% is just like U.S. indices. It's like, you're talking about the deepest pockets in the world are just, they're buying the same stuff that a retail trader can buy, and just at much, much bigger levels. But it's like, if you think that all of them are the brightest minds in the world, it's like they're just doing the same stuff that we can do. They just have a lot more money to do it with. So,
well, and actually they're doing it maybe even the brilliance of what Warren Buffett as an example.
sure.
Warren Buffett's brilliance is in his simplicity.
Absolutely.
Right?
Yep.
That's where he gets he doesn't have to, like, sometimes we try to get, and I do this all the time. We try to get cute and smart.
Yep.
And,
Timing
I'm
everything
think outside the box and
Yep.
like, and all this kind of stuff. And Warren Buffett's like, hey, listen, things need chipped.
Yep.
I like the taste of sugar water. And I mean,
Yep.
keep it simple,
Yeah.
I mean, and he's done absolutely brilliantly by doing that. He was late into the party into Apple though.
For sure, he was.
He
Yep.
avoided technology for a while, but you know what? Listen, I love somebody. One of the things I can't stand is somebody who's unwilling to admit they're wrong.
Yep.
So I give it to Warren Buffett saying, hey, listen, I'm wrong. I was wrong. I missed it. And that doesn't mean that I'm going to stop missing it.
Mm-hmm.
I'm going to get in right now. And so I give him credit for, realizing he missed it and getting in. So
yeah,
he's done awesome.
And same thing even last year when he was dumping airline stocks. I mean, he was taking a lot of heat and a lot of criticism for dumping airline stocks, but it's like there's probably more quality stuff he can put his portfolio into or put the fund into. So anyway, everyone's wondering about, okay, Facebook, Amazon, Apple, Google, Netflix, Microsoft. Those are your big FANG stocks. If they come down to good levels, look, I'm a buyer too. I've already talked about this in Equities on Man. There are levels I certainly want to buy at. So again, keep your eyes on them, but it's so nice. It's finally nice to see that these technicals, a much needed correction that we've been waiting for, is finally starting to take place. I think there's more red ahead. I'm not going to say pain, because if you know what you're doing, it's not that painful when you can buy things on sale. It's not that painful when you're buying high quality stocks at a discount. It's not that painful when you're actually in bearish positions and making profits. So another thing that we are looking for is something like the volatility index. Okay, this is the VIXI up today. Tyson, I'm only a couple dollars off my break even, man. I'm so happy to see this. This is about time. It's like I've got a break even on this around $28. And
you can get that. You can get that by the open tomorrow.
Oh, I mean, we could have a gap to $35, $40, and if that's the case, like, I might just take it and run. I'll be up a few $1,000. It's worth hanging on to. I've been sitting on this for a couple of months. It would make me super happy. If somehow it even squeezes higher and becomes even more crazy, like it was during COVID's little crash last year for 3-4 weeks. I mean, let's see how high we can go. But again, I'm not trying to be greedy. Most likely what I'll try to do is during intraday trading is I'll start activating trailing stop losses and probably give it like maybe a 5 to 10% really tight trailing stop loss. Otherwise, during normal market hours, I'll probably just protect. Especially if I'm up, 80, 90, 100% of my position. Why would I hang on to it, without having some type of trailing stop loss in to protect? So, all right. Great stuff on the stocks. That's all I have. Final words, Tyson, you're good?
Good to go.
All
Thanks,
right.
everyone.
Hit that like button for us. Thanks for being here. Spread the word. Spread this link. See you next week, everybody. Appreciate the patronage. Come back next week on Monday, and we'll be back. Talk to you soon. Thanks. Bye.